Hello everyone, happy Sunday. Simon is here with AvaTrade. I'm welcoming you back to our webinar, your weekly trading plan. And for those of you that are new, I always like to kind of explain in 2 words what it is. And the title says it all. It's pretty much we making a plan for the week, creating a structure, working out possible scenarios, and trying to find out what to do in the upcoming week. And I always say it again, one of my favorite phrases, and it says you plan your trade and then you trade your plan. Otherwise, trading could be a lot of chaos. And it is, as it is anyway, but we can create more structure to it from our own discipline and preparation and structure because believe it or not, or like it or not, we cannot control the market. That's for sure. We cannot control the market. We cannot control the outcomes and events, but we can prepare ourselves and have a little bit structure for the upcoming week. Before we go any further, as usual, I'd like to read the risk warning disclosure. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work or whether you can afford to take the high risk of losing your money. You can find the risk disclosure statement at avatrade.com. Okay, so what we're going to do today. It's a regular agenda. We'll work through indices, FX, commodities, and stocks, maybe in a different order. And before that, I'd like to mention, as usually, what's happening as far as the big picture. COVID is still there, unfortunately. I read a few articles from a few countries that they start treating it a little bit lighter, treating it as a common cold. I don't know if it's good or bad. I'm not here to judge, but it's still there. A lot of people get sick. People, unfortunately, still dying, and the businesses are suffering, and it's a lot of chaos still. People are not that freely traveling. It's probably a little bit more now, but still not in full capacity. So life is not back to normal yet, unfortunately. So that's ongoing thing. Now for a few weeks, we have a lot of issues with Ukraine, Russia, and it's still there. It's still building up. A lot of publicity about it, a lot of potential outcomes, and analysts are coming out with all these ideas of possible outcomes. We'll see. God knows what will happen. I hope things get solved, and I hope there won't be any wars because, as I said last week, the war is not good for anybody, just for the arms sellers, unfortunately. Okay, so that's the major things. Now, last week event created a lot of crazy volatility on the market, which is very good for traders, not so great for investors. And it's really confusing. We'll talk about it in a moment. We'll take a look at the charts and we'll go through the instruments. Now, let's take a look at what's waiting for us as far as the economic calendar announcements for this week. Sorry for the font that stretched a little bit so it would fit the page. These are the, there's more events. As usual, I just take the ones with the high impact, the mark in red. So Monday, we have the GDP numbers from European Union, Germany CPI numbers. On Tuesday, retail sales from Australia, RBA interest rate decision and statement. That's going to be very interesting. Australian dollar has been suffering a little bit. We'll take a look in a moment. Retail sales from Germany, ECB bank lending survey, manufacturing PMI from US, import number, Unemployment rate from NZD from New Zealand. Also, the currency has been suffering in the past week. We have a speech from the governor of Australian Bank on Wednesday. CPI numbers and the core CPI numbers from European Union, also very, very important. The ADP numbers, they're showing the upcoming Friday. We'll get in a moment. So the employment situation, that's on Wednesday. On Thursday, we have trade balance from Australia, and these are important numbers from UK. We have Bank of England monetary policy reports, pretty much an FOMC version of UK. So that's very, very important. The monetary policy and the speech will be right there. So that's on Thursday. So as we know, the instruments that are anything to do with the UK are going to be very sensitive this week, and that's the pound and the FTSE, of course, as the equity index. Now we have interest rate decision coming out from European Union also on Thursday. So Thursday is a big day, Europe and the UK, as far as the announcement of the interest rate. Now, and Friday, of course, the non-farm payrolls coming out. That's the most important, I would say, announcement of each month. It's the first Friday of the month. We'll see how many jobs were added. Last time, there were less jobs than predicted. This time, the expectation is 200,000 jobs added. Let's see what happens. And of course, they usually report together. The Canada reports the same thing, employment and unemployment data. So all these things are there. I suggest, as always, I say, go to your economic calendar and kind of put yourself reminders, or either mental reminders or calendar reminders for the instruments or parts of the world that you are participating in trading. So that's important. And let's move to the trading platform and let's try to analyze the market. And I'd like to start today with commodities, and natural gas is right here. Now, we spoke about natural gas. Remember, we said there was a lot of accumulation there and it shoot up, and then we came back to this consolidation zone, and we said that possibly it will hold at some point, and then preparing for the next move up, and that's beautifully happened. Take a look at the weekly chart. The week played up very nicely. Initially, it gapped down, and then we actually had a spike. Let's take a look. That's very interesting. Let's see if we touch the high. The high here was on the previous move, 4.874, and this one isn't that interesting? 4.874 to the penny. Speaking of levels, you know, again, I can't tell you what to do, but through the years, and I've been doing this for over 21 years now, I like the levels because somehow mysteriously or logically or whatever the reason is, they work. And take a look, it hit, you can't make it up. This was on January 12th, and this was on January 28th, 16 days later, and it stopped right there. Again, these are very simple. It's very simple to explain. Whoever stopped it on this move higher, it was the same player or group of players or big rollers or whatever you want to call them. They're still there. That means there's a limit seller sitting there, and it doesn't care what happened. Every time it comes here, doesn't matter how strong it goes, it stops, and the same thing happened there. Very, very important. Okay, so the levels do work. They're not always perfect. There's always tails going up and down, but in general, it's important to know the levels. And this is partially what we do here in the weekly planning that we do, that really try to establish somehow at least potential levels for some actions. And we'll see it actually in a moment in indices, how it worked last week. So natural gas. Next, what's going to be next? We really don't know. Of course, the cold weather and the storms, the snowstorms adding to it. Russia-Ukraine conflict is adding to it, as we mentioned the past week or two, and it's been very, very strong. And this pullback was a great opportunity for buying. Again, we can say it's easily to say, yes, if I knew or what, but we're just saying what we see here. It was logical that they pull it back in to the previous accumulation, and the history usually repeats itself, not always, and this time it happened the same way. Okay, let's move on. Crude oil. We said about crude oil last week that we need to see closure about 85 again, and it did happen. They pulled it in first, and then we are on the way higher. Wednesday was a strong day here, and then Thursday and Friday we closed at the same level. So pretty much we have 3 days, approximately, let's say 87.37 and 87.36 and 87.30. 3 days in a row with all these spikes, we're closing pretty much within 5-6 cents. It says something. Okay, it's either buyers don't let it lower, buying it out for the next move, or maybe the sellers are stepping in and saying, no, we're not going to let it fly, and they might push it back below 85. Anything could happen. We'll be watching. Again, it depends a lot of the conflict that's being worked on. So that's crude oil. Let's take a look at copper. Copper has been selling, and we are at the previous level of support. It's a key level over here. So if the market gets some, talking about equity market, if the equity market gets some push to the upside, we might recover here. If the market continues to slide lower, we might see the copper follow as well to the downside. Now, gold had a really bad week, and the past 3 days were crucial. We had huge bars to the downside, and then Friday it was a continuation to the downside, and then we managed to close at the previous day's low. So it could be a sign of life a little bit that we bounce from here. It also could be a continuation to the downside, and if that happens, we can potentially go down another $30 to the previous levels from which we bounced a few times here. A lot of actions here. We bounced from here and here as well. So we'll be watching gold. A lot of traders are involved in gold trading. Very interesting what's happening now. We broke the trend line here and we closed below, and then it followed, but we had a little bit of a recovery, closing right at the previous day's low. So we'll be watching it. Now, palladium caught my attention. Take a look what a move came from around 1868 to 2367 the upside, and we are actually holding. There were a few pullbacks and we closed at the highs, and let's see what's next. We could be facing a resistance, so the pullback will happen, and if that happens, so 2200 or 2202, this is the level around here. It could play as a support. And if we are moving higher, so this level right here around 2418, 2420 could be a strong resistance that will face some sellers trying to short around this level. So we'll be watching palladium this upcoming week. Soft commodities worked out nicely. We've been talking about them the past few weeks. As Baron said, it's a publication, financial paper. They said that 2022 is the year for agricultures, and I mention it every week pretty much, and it worked very nicely. Wheat give back a little bit of the gains. It was a nice beginning of the week, but then we came back in. But corn and soybean had a very strong week, continuing to the highs, closing the high of the week. We closed the gap here on corn. So if the gap is closed, it could be, and it's also a lot of touches at this level here. It could be this current level where we close 635. It could be either temporary resistance that we pull back in, or if we start closing above it, will create a support and a platform for the next move higher. Soybean, Soybeans, similar idea. Let's take a look. Similar idea as far as levels as well. We had a nice move and we're facing a resistance at the previous level. And this is a serious one. The high here was 1478.75. And from this level, we really sold out. It was a long selling period. And then we're back to it. So we're facing a very strong resistance here potentially. And again, if we see some price action closing about it, 1878, 1879, it could be continuation. So we'll be continue watching this group. So far, it's been working very nicely. Nice each pullback in soybeans continues with the next high. Corn was a little bit late to the party, but it was really accumulating here. And now you can see the fruits of this accumulation. Just to explain to you, it doesn't matter what the chart is for. In this case, it's corn. If you see something like that, it was a strong resistance. Then we broke through it, and then we start building few days. Here it's probably a week and a half or 2 weeks of accumulation, and all the tails hit the previous level of resistance. So it's really establishing a very, very strong floor or support. And whoever players are usually, these are big players, they're accumulating, they will not settle for the small gain. They usually go for a killing, and that's exactly what happened. But the initial move, correction, continuation, confirmed. They didn't even let it touch the level again. And then this is the serious move. So it could be all these players are unloading here. So we might see a little bit of a correction to the downside, or they might be with a bigger appetite and taking it to the highs as well. So anything could be happening. We'll be watching. So far scenario works nicely. This is the fundamental trade on analysts saying that the soft commodities, the agricultures are running this year, and it worked very nicely. Okay, let's move on to Forex, and I was very happy to see that it worked out the way we said it would. And the dollar index, I don't know why my levels disappeared, but we said that we need to see a closure about 96, and it did happen. And there was a pullback below 95. Okay, let's just do chronologic. We came from 90 all the way to almost 97. This was the high, and then we start playing around. Then it was a consolidation here. They pulled back below 94, and then it came right back to 96. We're going to take back to 96, and we broke through it really, really strongly. And we are currently about 97. So this move was very, very strong. And again, this is fundamental trade. There was a lot of accumulation here. There was a breakout that had some traders think we're going lower, even though fundamentally everything is on the side of the dollar. We have Feds. We'll be talking about it in a moment about the FOMC last meeting. What happened here? All the short sellers, they face really a hard squeeze, and that's what happened here. And then the moment we just went through 96, it accelerated, and we didn't even stop at 97, went straight to it on Friday. Oh, this was Thursday, and then Friday was a flat day, open and close at the same price pretty much. So if we are holding this level, our weekly chart showed very nicely. Again, some would probably find this as a cup and holder. It's a classical formation. I don't want to put these tags on it, but you could say that this is a cup and holder. That means that potentially this move from here can repeat to the upside, and we could see potentially at some point all-time highs on dollar. Let's see if it's all-time highs. Yeah, pretty much. And it's a cycle. Take a look. This high was here, and in 2017, and then we pulled back in, and we're right there again. Speaking of levels, what's the high here? 103.785, 103.8. I'm not gonna say anything really works. So, and over here we actually made a higher low. We didn't go all the way here, and then we open now to, it's not gonna go overnight to this level, but we're pretty much open for continuation and maybe reaching the all-time highs on US dollar. Very interesting situation here, very strong. Okay, so of course, because of that, all the major currency pairs really suffered. This is euro dollar. We spoke about it last week. We said that we've really been sitting here for a while, not doing much. So either way we break, it's going to be continuation, and that's exactly what happened. The moment we closed below, Thursday continued, and Friday flat day. British pound, similar idea. It's not as weak as euro dollar, but it's been really selling. Aussie dollar, that's what I meant, that this week interest rate could either kill it or save it. Why am I saying that? We're right at the level from which we really stopped. This huge sell-off stopped here. And now we dipped below it on Friday. We closed right on this level. So it could be we'll find the temporary bottom, and from here we're going to go higher. But again, if US dollar continues its strength, we can break down to it. And weekly chart shows beautifully how that could be possible. Let's take a look. We sold out from this level, the current level we're on now. We sold out, we came back, we made highs from here. Then we've been here in the channel for a while. This is a weekly chart. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks we've been sitting here. Almost 3 months in the same range, about 250, 260 pips. And Friday, they didn't let it close below. But if we are seeing the closure this coming week, and if we're not seeing, I don't know, interest rate increase from Australia or anything major to save the currency, and if US dollar continues marching to the upside, we could see a strong sell-off on Australian dollar here or continuation, and it opens the brand new area for the sliding game over here. And USD CAD's been very strong also in this week, even though the oil was strong. The Canadian dollar was really weak this week and this past week, and the USD CAD moved out of this resistance here. So I'm just trying to find this one that I called last week a funny currency. Sorry for that again. The USD TRY, after all this excitement roller coaster, we've been sitting flat on this level, so there's nothing to say. Again, the longer we sit flat, the harder probably the move will be. Which way, we really don't know, so we're not gonna guess. USD ZAR, remember I said, I think last week or the week before, that USD ZAR, it's about to move, and I didn't really understand why the dollar was going lower. And when the dollar recovered against other currency, it didn't recover against this. So it's kind of a slow motion. The moment they decided to take it, they took it nicely from 15 to almost 60, 1570, a nice move. We might continue to the upside again. Okay, so we understand, just to wrap it up, US dollar is getting strong, all the other currencies are weak. And yes, important, remember when the market is selling, I said and I explained that yen, the Japanese yen is getting stronger. So a good play would be shorting the currencies against the Japanese yen, and they work very nicely. Let's take a look at the weekly. This is the 3-week move. Australian dollar 4-week sliding against yen. Euro 3-week sliding against yen. NZD 4-week sliding against the yen. CAD 3-week sliding, and pound is holding up. Actually, this week we had the 2-week decline, and then we're holding now. And that's it with Forex. And let's move to indices, and we'll kind of we'll do the overview of last week that we spoke about. Remember, we said on last week, I'm going to bring the chart with with moving averages. Remember, we said on the weekly chart, this is the S&P. We said that that this could be retest on the 50 moving average, and if we break that 1250 would be a next support, and it played very, very nicely. We went a little bit below it. The low of the week was 42.13. But whoever was playing this scenario, again, I'm not the one saying yes, you should have, you could have. I will never say that because you never know. I'm just showing what we spoke about. The 1250, the level worked out, and it was a nice bounce here. We'll talk about in a moment why and what. I just want to show technicals first. 1250 held. Then we spoke about Dow Jones, similar idea. We said that we closed below the previous week, below the 50 moving average. This is the weekly chart. So next support is the tails over here, and it did happen. It really went to 33,200. I don't remember exactly what number I mentioned last week, but it worked out very nicely. And Nasdaq, the same thing. We did close the previous week, so we said that we might go and retest the 14,000. We did, and it worked out nicely. Again, I'm not saying it was a good idea buying here, but whoever was watching it and finding that at some point the reversal was coming was a nice play. Now let's talk about it, why and what caused it. We'll move into 1 hour chart on S&Ps, and let's just go to daily for now. So take a look. We had a few days of really a lot of tails, and Wednesday, this was the day that we closed a little bit higher here. And FOMC, I don't know whoever was watching the press conference. Of course, they announced the same thing. It was no surprises, but the press conference, I actually watched most of it, if not all of it, and I was very disappointed. And so were some other, I'm not saying I'm the analyst there, but a lot of CNBC analysts and so on. And after the speech, whatever they were saying, it's Powell, not to say more than that, but Powell, to me, he sounded like a kid in trouble, that he's in front of the principal and he just trying to talk himself out of trouble or whatever that is. So, and I start questioning: is the Fed really independent entity now, or they just saying what the government want them to say? And I'm not there to judge. But what happened again? He was just trying to say general things, and there were a lot of hawkish things. When one of the reporters, whoever they are, representatives of banks and companies, they ask, is it possible that instead of projected 25 base points, you can do 50 and more aggressively? He didn't say no. And when that came out of his mouth and continuation, the market really starts selling around that point. So and since the FOMC meeting and press conference, there's a lot of analysts and a lot of people that kind of trusted on Wall Street start talking about recession, start talking how Feds are really blowing it and they're late, and the interest curve and so on. A lot of talks, a lot of kind of negative outcome for the market. Some say the S&Ps are going to fall 20%, and some talking about recession coming in the middle of 2024. So a lot of really negative predictions are coming, and that really makes this market amazing in the upcoming weeks and months and years, because we all know logically what happened, and the Fed's really screwed it up by not taking the actions. And these are not me saying, these are people, including the one of the ex-Feds, speaking that they should have done it a long time ago, and now they should really do it aggressively, even though it's going to shake the market. But they need to really do something to fight this situation. And it's going to be very interesting, and I can't wait to see the upcoming week's action. So anyway, Then comes Friday, and let's see, Friday the 28th, the market was going lower, and then at some point they just decided to take it high, and it was a very, very strong move. All the indices, the stocks, of course, you know what helped it. Two stocks helped it. Basically, Microsoft and Apple reported good earnings, and investors decided, okay, let's jump on this, you know, boat, and let's just sort of train and just run it up. And it was a nice, nice move. And let's see how Monday starts. It's very interesting. I just want to zoom it out. Take a look. It was a very nice correction here, but the high of Thursday was 44.21 and a quarter. We went over it, but we closed below it a little bit, a fraction, a little bit below it. Close was 44.20 by a quarter of a dollar, quarter lower. Okay, so I can't wait till Monday. I really want to see what's happening on Monday. So far, just to show you, we had a really, really big drop here. We had a few days of huge tails here, up and down, and this is the Friday, the culmination of the week. Very, very strong. They might take it higher, but with all the analysts speaking about the doomsday and recession and everything else, I don't know who will be running into buying stuff here. And then we'll talk about individual stocks in a moment. So that's why I'm saying it's going to be very interesting. All right, I can't wait. Like I said, very excited about Monday. So this is the picture. They might decide to take it higher, but like I said, they're going to face a lot of pressure from people that are logical and are listening to the people that know something. And those people are expecting the fall in the market, and some are predicting 20% drop in S&Ps. Okay, let's move on. European indices, they look a little bit more positive. Again, we are on the daily chart, kind of hitting our heads against the 50 moving average on the CAC 40, French FTSE, very strong. It was a nice recovery after the sell-off, and DAX is not as strong as FTSE. It looks a little bit more as US market, even though I had the three moves higher, but Friday was a down day on it. And let's take a look at Nifty. Nifty had a nice drop, and we're sitting here. Okay, so just to wrap up with indices, fundamentally, the market is looking down. Not today, not tomorrow, not in a week maybe, but some predicting that we're going to see a big drop. Some predicting recession in 2024. And it's going to be a lot of caution there, and a lot of funds are getting rid of stock. At the same time, some are buying them, so it's going to be interesting battle there. Okay, so let's move to individual stock, and then we wrap it up with that. Netflix, a lot of actions here. Ackman, one of the big investor in his company, they bought a lot of stock, and he actually announced it. I think he bought like 3.5 million shares last week after the drop. So that also added to the upside a little bit. And also a co-CEO, Reed, he bought about 20 million worth of the stocks after this drop. Okay, so it's been sitting here. It hasn't even tried to go and close the gap. And if it did, it would probably need to face the 400 first and then see what's next. So Netflix in a lot of attention there. We'll see what happens. Now let's take a look at the stocks that had earnings that we said we prepare ourselves for this for last week. And Apple had good earnings, even though the market pulled in. Then Friday, actually Apple pushed up, and it took the market with it. And different analysts kind of a setup price, new price for the Apple. I think UBS set up 175, and RBC set up lifted it from 210 to 215. interesting predictions. I think super optimistic. Let's see what happens in the real life. Microsoft had also good earnings, but it didn't really do great on Friday. It's still not out of the woods over here. We did kind of lift our head about 304, 305. Let's see if we're holding there. Tesla had a really bad week. It was a sell-off. We bounced a little bit higher, and we stopped at this is the daily chart. We stopped at the 200 moving average, and let's see what this upcoming week is coming. We had good news on Tesla, and there's interesting, funny things happening. Musk is playing games on Twitter with Biden's administration, and I tried to understand what happened. I did a little bit of research, and it actually started when Biden last time we was speaking at one of the conferences to say by 2030. I think I mentioned one of our meetings that they're expecting 50% of the cars going to be electric, and he mentioned Ford and GM, and not a word about Tesla. And this time also they had some videos and so on, and no Tesla. So Elon Musk wrote on Twitter that he taught Biden how to spell Tesla. He says the company that starts with T, ends with A, and ESL in between. So it's kind of trying to be funny, but the truth is, I think he's right. Also trying to bring this up, and there's no response from Biden or administration. They only talk about Ford and GM, very patriotic, and it's funny because Tesla is an American company. And just to give you the numbers, and again, I am on the side of Musk in this case. Ford in the last year, in the 2021, sold 25,000 electrical vehicles. GM sold 27,000, and Tesla sold 361,000 electrical vehicles in US only, and 936,000 worldwide. So I think it's worth speaking of. So I hope it changes. Otherwise, Musk is not going to stop. He's going to make fun of them continuously. Okay, so that Tesla. It could be that we stopped over here. Again, we can draw the levels around here. This was the level where we stopped from the previous move, and there was a consolidation below the level. And now we kind of touched the level around 795. And let's see what happens. Again, just to remind you, if the market really start pulling in hardly, the best stocks are going to get swallowed as well, because the panic goes across the board. Yes, when we turn around or we go higher, the best stocks are moving higher first. But if there's tanking on the market, everything tanks more or less. So let's see what Tesla, if we have the up week, Tesla might recover here. If we continue selling off, we might dip lower. We're not gonna guess here. So Johnson & Johnson also reported this week. It was a very nice reaction to the earnings, went to the upside. Intel didn't do that great. We sold out of Intel. Boeing, also some issues. There was a sell-off. And let's see for the upcoming week. We have few companies that are reporting in the upcoming week, and these are very serious companies. And of course, you all know them. Google is reporting. I just want to find out the dates. Just 1 second. Google reporting on the 1st of February after the market. Okay, so here again, this is the market reaction to anything. We are below all the moving average. The 50 is crossing 100. Usually Google reports good news, but again, it depends what the market in general is doing as well. So Google is reporting on the 1st of February. Amazon had a little bit of recovery. It was a big sell-off on Amazon, and it reports earnings on the 3rd, also after the market. We'll be watching that, of course. And Facebook is reporting on the 2nd after the market. It's been also selling together with all the big names with the market together. And Alibaba, we don't talk much about this stock. Sometimes I bring it up. Alibaba has a triple bottom over here, so maybe there's a chance that it will try to bounce here. 1, 2. We made from the second retest, we made a higher high, and we came right back to it. So around 110 is a support, plus minus. And on the 3rd of February, they are reporting. We are below all the averages, but we look like we're finding a little bit of support here. Again, it's a foreign company, so that's why you see this choppy um, choppy trading with the gaps and so on. Okay, and the banks. The banks had a little bit of recovery in this week after the gap. They gap down and moved higher. So Citigroup, JP Morgan, and Goldman Sachs, similar idea. Maybe they're finding a little bit of support somehow. Really don't know. And the two stocks that I bring up all the time, the Snapchat and Twitter, I'm watching them really, really closely because the sell-off is continuous. So one of the things that traders like, they like to really watch things falling and really find when they bottom, because if you start buying somewhere before we bottom, it's something they called catching a falling knife. It could be painful. So we are sitting on the 200 moving average here, and if you look at the daily chart, we start building a little bit of support. It could be it could be not, but we'll continue watching it. Twitter, it's pretty much identical chart over here. It's even weaker because we're far away from the 200 moving average, but we are finding some kind of support on these two guys here, the Twitter and the Snapchat. Okay, and let's take a look at Bitcoin. Bitcoin had a little bit of recovery, but it's not really screaming recovery over here. You know, we had a nice drop, and slowly with the tails and so on, we're trying to climb out. And let's see what happens. We are currently trading at 37, almost 38,000. It's a nice recovery from this spike low here, from 33,000 to 38,000. It's nice. Let's see what happens next. Okay, so let's just summarize what we spoke about. We spoke about commodities, and softies are continue to move. Softies, though, the agriculture, the soft commodities, they moving higher. Oil and natural gas are continue to be strong, and a lot of it, it's a cold weather that's coming now with all the storms, and of course the number one reason, it's a build-up on the border with Russia and Ukraine. And we had the market. The Friday we saw a little bit of recovery there, and there's going to be very interesting watching who's going to win now, the bulls or the bears, because the last FOMC really signaled that it could be more aggressive actions from the Feds to really fight the current situation with inflation. So we'll be watching that. If that recovery continues, or if this was something that a nice try, that will follow up with the sell-off, continuous sell-off, and dollar index is getting stronger, and the other currencies are selling off against it. I want to thank everyone for coming to our webinars, and I want to wish everyone an amazing week, a healthy, happy, successful, profitable week, and hopefully we'll see everyone and more new people in the upcoming week. All the best. Take care.